Do you still believe the Fed is bad for America?
I don't think the Fed right now is very good for the American economy. Let's put it that way.
Okay. You don't like that?
But I do think that the Fed made a genuine stand for Fed independence today.
Okay. A lot to unpack there. So wait, do you agree with their decision today?
I think it should have been a 50 basis point rate cut.
Even with inflationary concerns that are out there?
Even with inflationary concerns that are out there. Christopher Waller gave kind of a
He didn't
landmark.
dissent.
He did not dissent. And that
He could have.
That is the biggest news of the day, actually.
Yeah.
Because Waller directed us to what he calls core private sector job creation. What that does is it looks at private sector job creation and it nets out education and healthcare. We've had, you guys have had a few really good articles on that since the latest employment report. In any event, when you net out healthcare and education, what we call recession-proof industries, the last time we had a job created in the private sector was April, meaning, according to Waller's benchmark, the Fed should have been lowering rates not just in July, but in June and in May as well, because that's how long we've seen this private sector deterioration. And then we get June, right, which has got a negative number in front of it. The pandemic notwithstanding, we haven't seen a negative print in front of non-farm payrolls in real time, mind you, fairly real time, since September of 2010. So it's been a very long time since we've seen the job market weaken to the extent that it has. And Waller would agree with that, and yet he stood firm with the rest of the committee today.
So onto your statement that the Fed made a good case for its independence today. What was that?
It was that it's exactly what I just described. Waller's own research dictates that we should have been playing catch-ups because we didn't lower in May, we didn't lower in June or July, yet he stood with the rest of the committee. He may well have given up a shot at being chair, and the betting markets had him in the top position going in. Of course, he could not be interviewed these last few days because the Fed was in blackout.
Isn't that a good thing for markets then? Isn't that a good thing for people who are concerned
Yes.
that there is political pressure on this entity?
Yes, because they pushed back against the political pressure. Through that prism and through that prism alone, the right thing was done today. That being said, they really do need to find some time to catch up to the economy, despite what's happening with the potential for tariff pass-through.
So, okay, so let's talk about that a little bit, because I remember last time you were in here, July 29th, it was the day before the most recent Fed decision before this. You came on and you said the underemployment is such a big issue in this country, and we're not looking at it the right way. What I took away from our conversation was your evidence that there were all these people out there who were essentially doing gig work, who wanted to be working full time, and the effect that that's having on the economy. Does the Fed understand that in your view?
Well, the Fed staff certainly does understand what's happening. We've had more than 1.4 million full-time jobs lost since the beginning of this year. And we had a great big boost to the labor force because the census had us add a couple million people into the population. No, I think the Fed understands, or at least the Fed staff, they've all been given these presentations. They understand the magnitude of what's facing the job market. It's not a lack of understanding, it's a lack of recognition because they're under attack. But the Fed completely understands that incomes are under strain, that the only thing that the class of 2024 can say of college graduates is, at least we're better than the class of 2025. I talk to college-age students all the time. The jobs are just not there. And, youth unemployment is at recessionary levels. We have 77% of states in the United States. 77% of the population is in states with falling job openings. I mean, you got to go
what
back
can
to
the
01
Fed do by cutting rates that will, because what if it is because of AI? Like, what is it if there are structural changes that are going on in the labor market that a rate cut
Congress should change the Federal Reserve Act to no longer have the employment mandate. You cannot ignore a weakening job market.
But again, I would go to, if it's not the Feds, they've got to look at inflation. There's a dual mandate. And inflation it's sticky. It's been sticky for a while, right?
Inflation has been sticky. It absolutely has.
So,
and yet we're not seeing the fact that, according to Redfin, 80% of the major metropolitan areas in this country have falling home prices. That's not filtering through to the CPI, nor will it yet, because there's typically, according to Fannie Mae, a 6-quarter lag between when you actually start to see home prices falling. We've also seen this in Case-Shiller 4 months in a row now. But once you see that, it's a very long time before you get that deflationary impulse that's evident in the CPI, but it's coming.
But don't you think about, Danielle, I think about this a lot in terms of what's going on in the economy, especially post-pandemic, that there are people who have great jobs or in the market, they're doing okay. And then there's a lot of the economy that isn't. And I don't know if that is the result of Fed policy or more policy that maybe our lawmakers in Congress need to think more broadly, not about political contributions that get them back into office and companies.
Amen to that.
But
Caroline.
rather thinking about all of America.
So, I wrote a whole book about it. I think
I'm going to get off my soapbox.
No, but you're on the right.
But I'm just saying that I don't know if it's the Fed responsibility here.
The inflation.
In fact,
I mean, if you're speaking philosophically, the inflation and employment mandates are inherently conflicting. This was a 1978 tweak to the Federal Reserve Act that completely changed how the Fed operates. Should the Fed go back to being only an entity that fights inflation? Absolutely. We should make that happen yesterday. That, however, is an act of Congress.
So, in other words, and the Fed has done the right thing. They're watching inflation. Inflation is getting
until they're let off the hook, they still have that employment mandate.